Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 3rd, 2025, and we're diving into Hess Midstream's latest earnings report for the third quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hess Midstream has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Hess Midstream reported revenues of $420.9 million for the third quarter of 2025, up from $378.5 million in the same quarter last year. John, what drove this increase?
The revenue growth was primarily driven by higher physical volumes and increased tariff rates. The company also saw a significant rise in throughput volumes, with gas processing up by 10% and oil terminaling by 7% compared to the previous year.
And what about profitability?
Net income for the quarter was $175.5 million, with net income attributable to Hess Midstream at $97.7 million, or 75 cents per Class A share. This is a notable increase from 63 per share in the prior year quarter, reflecting strong operational performance and cost management.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 73 for Hess Midstream. Based on a survey of 3 analysts, the company reported an EPS of 75. John, how significant is this beat?
It's quite significant, especially in a market where meeting or exceeding expectations can drive investor confidence. The 75 EPS not only surpasses the forecast, but also highlights the company's ability to manage its operations efficiently, even amidst challenging market conditions.
Operational efficiencies and future outlook. Hess Midstream has also reported an adjusted free cash flow of $186.8 million and increased its quarterly cash distribution. What does this tell us about their operational efficiencies?
The increase in cash distribution to $75.48 per share is supported by excess adjusted free cash flow, which indicates strong cash generation capabilities. The company is effectively managing its capital, as seen by the reduction in capital expenditure guidance to $270 million for the full year, reflecting strategic project suspensions.
Looking ahead, what can we expect from Hess Midstream in the next quarter?
The company has provided guidance for the fourth quarter, expecting net income between $170 and $180 million and adjusted EBITDA between $350 and $325 million. This outlook suggests continued focus on maintaining operational efficiencies and capital discipline.
Key takeaways. In summary, Hess Midstream has delivered a strong performance in the third quarter of 2025, with revenue and earnings exceeding expectations. The company continues to demonstrate operational efficiency and strategic capital management. John, any final thoughts?
Hess Midstream's ability to beat EPS expectations and increase cash distributions is a positive sign for investors. The reduced capital expenditure guidance also indicates a prudent approach to capital allocation, which should support long-term growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Hess Midstream's performance in the comments below.